The power law trend line wars are upon us. We're sitting down with one of the generals. Your
Good to
model's
see you,
hot
buddy.
right now, dude. Your model's
Good to see
hot.
you.
Good to see you
Yeah,
too.
it's getting some traction. It's exciting. Uh, we were just chatting a little bit pre-show about it. It's pretty funny. This Giovanni fellow who some of my followers pointed out to me this year. He's been tracking this for a long time, actually. He was doing some stuff on Reddit, like way back, I don't know, 2014, 2015, doing some power law regressions. And then he did a big one in like September or so, 2018, which was, 10 full years of Bitcoin at that point, showing how it seems pretty natural that Bitcoin's following a power law trend line. And then I posted on Twitter in the very end of 2018. And so I had never seen his stuff. Mine was, as I wrote on the post, because I was talking to him about it, I had seen, I had been inspired by this Trololo, was his username on Bitcoin Talk, from about 2014, 2015. He was plotting this stuff in Excel, but he was on logarithmic, so different. We've talked about this now. I think with you and I, it's been almost 2 years.
We've been trend setting over here, okay?
We've been trend.
I saw it blowing up on Twitter. Fred Krueger had Giovanni on.
Yeah. So those
Uh,
guys are working hard back.
People are like, we found this new model. I was like dove in. I was like, all right, let me look at it. I was like, no, we've been talking about this model on our monetary base update for 2 years now.
Different circles indeed. Yeah, but I never heard of him until this year, so it was nice to see that other people were doing it. And he's definitely he's a hardcore statistician fella, and he's running it in lots of different ways, looking at hash rate, addresses, all the rest, and doing good work. And I definitely like what he's doing, and he is happy to promote my stuff as well. So it's cool. But the point of the story, going back in time, which I think is just funny, is like we were all just doing our own things. I'm not a prolific tweeter like you, but I go back to that tweet of 2018, which I posted. Again, the first time that I'd seen anyone post coefficients and like find it and actually do the regression, which is pretty easy now with a lot of the statistical models that are out there, like statistical programs. You could plot it pretty easily, but uh, that was 3 or 4 months before our friend Plan B posted his infamous stock to flow model, which was somewhere in early 2019. I went back to check recently, and I just think it's funny because we're just doing our thing, uh, not claiming anything groundbreaking. At least I'm not. I'm just looking at the data, having fun with it, and seeing how Bitcoin is reacting to these things. But there was this whole sort of other, uh, what's the word? Hysteria might be too strong, but people got really excited about this stock to flow model, which I've posted in these monetary base updates, which I've been doing now. This is 6 full years. It's crazy, Marty. It's the
Dang.
24th update, so 6 full years. In one of them, around 2019, when stock to flow was getting a lot of early hype, I just did a slide. I posted it recently as well. Giovanni retweeted, which was nice, but I was just confused why stock to flow was getting a lot of coverage, because you could do stock to flow with silver, with gold. You can measure it in a few different ways. If you include jewelry, if you don't include jewelry, um, if you include industrial usage, if you don't include industrial uses, you can do it many different ways. And I saw a lot of cherry picking from this camp that was very excited about stock to flow. And I just laid it all out there, the different stock to flows, and didn't really see much correlation between gold or silver. Was curious why there might be that for Bitcoin. And yeah, I didn't there. That's a whole different battle I don't really care about, but there's a lot of people that were uh, coming out against that model over the years. But in any event, we still have the old 95% R squared for the power law trend line, and it's continuing on. We're right on trend.
I feel, and everybody's bearish right now. You fall 10K below an all-time high that was hit for a few days, and people are, the sky is falling.
Yeah. Well, there's a lot of obviously negative news
Yeah.
on the back of that or the front of that. Um, I know you've been talking about it. How would you sum up all the pretty for government amazing coordination against Bitcoin in many facets, mining, privacy, developers? Any takeaway for you?
In retrospect, in hindsight, it should have been obvious going back a year, almost a year, looking at the ETF filings and the somewhat rushed approval of those. And everything's lining up perfectly. You get the ETF filings, BlackRock stamp of approval, back and forth with the SEC. Are we going to get it? Are we not? We get it. You have the blessed institutional players in Bitcoin and billions, tens of billions, hundreds of billions of dollars flooding into their products. In parallel, Tether becoming a large buyer of treasuries, onboarding the FBI, onboarding the Secret Service, now onboarding Chain Analysis. And it seems like last year was a big infrastructure build out for the compliant Bitcoin side of things. Get that off the ground, open the floodgates, and then you start coming down on quote unquote non-compliant self-custodial Bitcoin right after.
Yeah. And still going hard on even those that have been blessed, like Coinbase. Like Coinbase is clearly the blessed one, right? I mean, they're doing most of, not all, but most of the institutional custody. And clearly the Komodo is getting opened for them to come into Wall Street. But I thought it's still interesting, even with Coinbase, they're still going through these lawsuits with the SEC and, whether their offerings are securities or not. And I don't know, I know as Bitcoiners, it's not as big a deal, a lot of the shitcoin products that they have, but the little bit of some conflicting messages from the SEC there that they're still going on with Coinbase, trying to put them in their place, even though Coinbase is clearly picked as being the Wall Street crypto baby.
Yeah, I would say I think the SEC is on an island, a rogue institution, if you will, within the federal government. I would focus more on like the Treasury. I think they're looking. I had a good conversation with Tom Luongo last week that we posted on Monday, and I'm really coming around to his theses is that there's a massive power struggle, multiple power struggles at that layer. You have the Fed versus the Davos class, the Fed versus the current administration. Then you also have like the Treasury in the mix that's looking at demand for the debt, U.S. debt. You look at the size of U.S. debt, and I think there's a good case to be made that someone somewhere or a group of people somewhere within the federal government, maybe the Treasury, maybe the Fed, have recognized that we have a pretty massive problem in the fiat monetary system and the U.S. Treasury market, and they may or may not. They may have identified Bitcoin as a viable collateral asset that they would like to have exposure to, and I think laying the groundwork for compliant Bitcoin within these institutions. And at the same time, I'd be interested to get your thoughts on Tether and what's happening there, because they're obviously becoming a material part of the Treasury market. $110 billion market cap now, a boatload of treasuries in their treasury, and I don't know, it seems like they're hedging their bets in terms of maybe creating an escape valve for themselves via Bitcoin in these compliant rails. This is the musings of Pepe Sylvia here, but I think I don't know. I could see something like that happening behind the scenes, hedging a bet.
No, I mean, I saw that Bloomberg interview with Paul Ryan, and I saw Nick Carter comment on it, which he was saying that he was even quoted his presentation where it was like, stables are the 16th largest buyer of treasuries among nation states. And Paul Ryan parroted that comment. But that was interesting as well that he commented on it, and but he also said, unprompted in that interview, I believe, was that there was a debt problem and there's possibly a debt crisis. So there's two interesting sort of signals that he, as a, I don't know if you want to call him successful or not, but relatively unscathed politician in the private sector now, has said we have a debt crisis. He said we have a possible debt crisis, and it's possible that we could have good stablecoin legislation. So yeah, that's pretty much lining up with what you're saying. I can show you it if you want to see the. I think there's a lot of hot air there, and as usual, you and I were not so confident on the noise. Look at the signal more, but let's see if I can find. Here we go. So here's the debt, and this is the debt in the United States. Let's see. Well, first of all, I have the entire history. If we want to look at it, we looked at this before. We got, Civil War, huge bump in the national debt. Andrew Jackson expunged the national debt, but you see it's pretty small on linear scale until you get the 70s. But it constantly grows. But if you look here in the dark green, so again, 34.6 trillion at the end of the month, 34.6 at the end of April 2024. But that, again, does not include the entitlements, the sacred cows. So everybody knows there's a problem now, as if, we haven't been saying that for 15 years. But the dark green here is what the Fed actually owns. And if you do that as a percentage, this actually shows me that they have quite a bit of room to run still. I'm not saying that has to happen or that the market will accept that, but you saw that the worst that it got was the Federal Reserve owned 28% of treasuries in peak COVID, end of 2021, start of 2022, 28%. And now that is all the way down to 20%. So again, that's literally saying that $1 out of every 5 of the that the United States Treasury issues as debt is monetized. It's full inflation without representation. This is actually the graph. That's what you're looking at, the graph of monetized debt. I think it could certainly go more. And if you think about the scale of that, what's 100 billion? What's 100 more billion of stable coins going to do, or 500 billion, or even a couple trillion, which I think Ryan said in the interview. I mean, yeah, it is going to create a demand for treasuries, and it is going to allow them to have sort of this, as you sort of phrase it, right, an escape hatch of their own making, where they can buy themselves more time. But I don't think it fundamentally changes the structure of the debt problem in the United States. As we can see, it's pretty massive.
No, we've discussed this in episodes past looking at this chart, but I have to bring it up again. It is just amazing looking at the change in the way this chart operates from beginning in the early 2000s. It seems somewhat regimented and smooth, relatively smooth, if you will. It just gets
a little bit even more market-based, up and down.
Yeah, then it becomes completely cockanatty. Just do it.
And pretty, like planned, not market guided, but, this is where, Ben Bernanke was saying, okay, we're going to buy $80,000 worth of treasuries every week. Okay, we're going to sell $20,000 worth of treasuries every week. It was a very systematic, we're here to bail you out, Mr. Market. We know that you need our fresh dollars. Very, very systematic problem of, in our view, a problem. They would view a solution, but of just purely monetizing the problems of the United States government and of the economy. So,
well,
yeah,
it's funny you say that because they'll never admit that they're monetizing the debt.
Not even our MMT friends.
No. Oh, how about those guys? They've had a rough couple of weeks.
They have. But I mean, the unbelievable thing was that I haven't watched that movie. I just can't
I need
bear
to
to watch
watch
it.
it.
I do need to watch it too. But I mean, where that clip was taken from, the gentleman, what was his name? Chairman of the
Uh,
National Security Council or National
John.
Economic Council of the Economic Advisors, the president, who could not even a little bit explain how monetization of the debt works and money printing by central banks was unbelievable.
No, he didn't
The
know how he
fact that
didn't know
he
how
was,
like basic treasury markets worked. He was like, "We're printing
and the
money." It's
fact
like,
that
no, you're issuing debt.
he was doing this on a documentary where they want to do more of it. It just shows how bizarro clown world it is. Like, it's not even a documentary where they'd say this is a bad idea. It's like, oh yeah, you don't know what you're talking about at all. Let's gas it harder.
That is just money we owe
Unbelievable.
ourselves.
Yeah, it's just money we owe ourselves. Look at the other side of the ledger. That was another thing I forgot to get this quarter. I'll get it eventually, but I've looked at the other side of the ledger. There are no assets there, just so everybody knows. The United States has some land. They have a few other loans as assets, but it literally is a huge imbalance. So this 30 trillion in debt, it's not matched by 30 trillion in assets. It's only matched by the net present value of tax expectations of their tax cows. There's nothing there on the other side. That's literally unlike you or I, who, if we have credit card debt, or we've a house loan, you have to balance it by the actual house. On the asset side of the ledger, it's literally just the net present value of tax receipts in the future. That is on the asset side of the United
Well,
States'
it's funny you
balance
bring this
sheet.
up. We're gonna kick you off the screen. Logan, pull up this tweet because Balaji was actually tweeting about this. I saw he got into a debate with somebody on this subject where he was basically like the debt is getting crazy, and then somebody retorted him like, well, you got to look at all the assets, and like pulled up this chart, and Balaji was like, yeah, I'm proving you right, like because these aren't assets owned by the federal government. These are just like all of the assets owned by
That's
Americans.
the system-wide assets that the Federal Reserve tracks, and who knows if that's even correct. Um, yeah, I know
But
this number that they're
Balaji's
talking
point was
about.
like, yeah, like if we're going down and you're expecting these assets to cover that debt, that means you're going to have asset seizure by the federal government
Exactly.
to cover all
Yeah,
this.
I mean, if you think nationalization of every industry is a good thing, and you go back to communism, then okay, we're okay. But obviously, that's not where we need to be. And again, this is where it really comes back to basics. You have to understand that capitalism is better than communism. Freedom is better than tyranny. Uh, it's tough days, man. We'll
Yeah.
hold off our war in Eastern Europe conversation until maybe later. Go through some charts, but uh, I think there's two things, at least in my view, that are different about like what's happening now versus what happened 30 years ago, 35 years ago when the Berlin Wall came down. There's a lot of peace and freedom in in the world after the Soviet Union collapsed. And one was had less dictators, you had more democracies. You have the opposite of that now, having more tyrannical governments, specifically led by the likes of Putin. So Putin is not Gorbachev. But then the second thing, which I think relates to everything that we just talked about and everything we're going to talk about, is that the interest rates were falling back then. That's a huge thing that not enough people talk about. With all this, it really is a cyclical problem that gets exacerbated by the government. And if you looked at a chart of interest rates, which unfortunately I don't have one handy, but most people probably know, I'm sure you do as well. Like in the United States, interest rates topped out to prick the gold bubble at 20%, depending on the market, could be 25% in 1980. And by 1990, they were trending down well below 10%, probably even at that point, definitely at that point. To where, of course, by 2008, as usual, governments went too far, especially after the dot-com boom and bust, to bail out everybody, and then bail out, as we know, everybody even more after the financial crisis, and then we continue on to today. So that trend of 20% to zero was a 35-year process. And only now it's turning around. Everybody understands the gravity of the situation, that we just can't have free money all the time. Like these past 15 years of 0%. I mean, that wasn't all the time, as we know, at 0%, but it was just such an anomaly and so crazy that they would try it. And it's no coincidence, actually, to me, in that I think that's another huge factor. It's just the government intervention of the credit markets is the other main scary thing to watch out about. And it's scary for people like myself and people live, on the Eastern Front here. Some tyrannical wars going on. So, yeah, rising interest rates.
Yeah.
Not going to make it easy on these
Inflation's
governments.
not looking good. The job market's not looking good here in the U.S. White pills. We need white pills, though. We can solve this.
We can.
Not the
We
government.
can.
Me and you. Actually, that's what we're here today. Matthew and I are
That's
going to
what we're here
solve this
to
whole
do.
problem. We're going to solve the world's
That's what we're
problems
here to
today.
do.
No, but it is, in all seriousness, it is. I mean, I'm not as well versed as you on the economic history, obviously, but it does feel like we're in this anomalous period where they truly have lost control to a certain extent.
Yeah. And it was already, the trend wasn't really good after World War II. Like we've talked about this. The period I just described in the 1980s was some of the highest interest rates ever. You'd have to go back to like ancient Sumer to see 20% interest rates. And it was just probably didn't even make sense. In this book, you can see them. Sidney Homer's History of Interest Rates. And the it's they've never been that high at 20%, which they had to be. Volcker pushed them up that high. And he was a big fan of gold, by the way, to prick the gold bubble once the gold standard collapsed in 1971. Actually, I got a good one for you. We can look at to talk about that. So, we can look at this one. So, the monetary base. Remember, this is We'll give you some other charts of that, of course, but this is what I've been tracking now for 6 years worldwide, all the central banks in the world. This is literally all the cash, all the physical cash that they print, which is about $9 trillion worth of that. Only 2 trillion is actual dollars. 7 trillion is approximate dollar valuations of yen, euros, so on and so forth. So it's 9 trillion. Plus another 18 trillion or so of what's called reserves, which is basically each bank in the system. It's the core of the system, each bank's account with the central bank. Put those two together, that's called the monetary base. You find it on the balance sheet of each central bank. And what you're looking at here is a percentage of worldwide gold in central banks, market price, over the last 50 years, divided by that monetary base value. So again, this is probably another anomaly that had never happened ever, because gold standards never meant 100% backing. The best data we have is like 40%. But basically here, we're looking at 1969 here, and you see that the central bank's gold in the world as a percentage of the monetary base was about 25%. By 1980, when gold went to $800 an ounce for about 2 seconds, Paul Volcker took interest rates to 20%. We were over collateralized. The value of gold was flying, and we were over collateralized actually of base money in the world. There was more gold value versus actual cash outstanding of central bank cash in the economy. And then it just fell precipitously from here all the way until it's just starting to trend up again. It fell down to like 6-7%. It was that for a few years. Now, with the gold price rising and central banks buying a little bit, but it's not a ton, to be honest. You hear that a lot, that they're buying a ton. It's not a ton. But you see that is now up to 10%. So it's back up to 10% gold versus the monetary base. That's the gold backing. And then you see Bitcoin here. It's a small number, but it's coming. It's just the Bitcoin value. No one's really reserving that yet, except for El Salvador and ETFs now, big companies, but no one's really reserving it on a national level. Still, if we look at the Bitcoin market cap versus the monetary base, we can see it's, as I say, it's lurking, and it's coming. It's coming up pretty quickly compared to like COVID when we had the last big boom. It was about, there we see in March 2021, 4%, 3.8% of the monetary base. And now, if we take it till today, or last full month, 4.4%. And this was, of course, at 70K Bitcoin, end of April 2024. Gold in central banks valued at 10.2% of all central bank money in the world, and Bitcoin is 4.4%, which is pretty crazy. And then these create questions, just as we talked about earlier. Are governments really going to want to get involved here? Are they really going to reserve Bitcoin? The United States holds a lot of Bitcoin still, right? Which they confiscated from various endeavors in the past. They want to sell it. They have sold some of it, but they haven't sold all of it. Will they keep that? Will they move it to the books of the Treasury or the Federal Reserve? Are the central banks buying this? Thinking about this, that this increase of this percentage of the Bitcoin value versus all the central bank money that they print. Will they want to start actually doing the unthinkable and reserving Bitcoin? And then once they do, if that catches on around the world, then again, it could be off to the races as far as the Bitcoin valuation goes. But another point of caution, just one more thing, I'll turn the mic back over. You never quite know, right? So gold, Bitcoin's totally different. I will submit that. Like, look at the Bitcoin price here on log scale. At the same time, you can see obviously it's flying up in an amazing power law trend on log scale here in the last 15 years, right? But you see gold here when it got over 100% of the monetary base value, $800 an ounce. If you and I, Marty, were in a gold bug conference or some, Mises Institute that was founded in 1982, but some gold bug hard asset conference in the end of the 70s. I've said this before. We would have been like, this is it. This is over. We're back to sound money. The world is going to return to sound money principles, and it's great. We're good to go. But the central banks succeeded in making people think that wasn't really a viable asset. Alan Greenspan was quoted somewhere here in the 90s of saying central banks stand ready to sell gold should the price of gold rise, which is curious. And for this, you got to go to people like GATA, the Gold Antitrust Action, I think it's Gold Antitrust Advisory. I don't know what it is. It's GATA. There's really hardcore gold bugs that know a lot of the history of this here, but the United States hasn't changed the value of the gold on its books. The Federal Reserve, all right, which is included here, has something like 260 billion ounces worth of gold. And by the way, it's 1.2 billion ounces is total central bank gold. Okay, just so you know, that's about $2.7 trillion at the moment. 1.2 billion ounces, but did I say 260 billion? 260 million of that is the United States Federal Reserve. We don't even know if it's even there, right? Fort Knox, these things haven't been audited.
Probably.
And again, it's probably not. They're probably recording it as both an asset and as an asset that they hold, but also a receivable, where it's basically they could have leased it out. Which is essentially selling it to try to dampen the price over the years, to try to get a hold on this fiat standard that they unleashed in 1971. And they succeeded. And this gets the gold bugs excited that perhaps we'll have a return to these high numbers here and gold will return to its rightful place. But we see how tyrannical they are in other aspects of government. It seems hard to believe to me that gold is going to be sort of the saving asset here, but this is why Bitcoin is exciting. And I think Bitcoin totally took the gold bugs by surprise in that it's accreting such value compared to what gold is doing. And as I've shown on my summary there, gold would have to only go up, a couple times basically uh, in value because gold is, well, not a couple times. I don't want to do the math in my head because I can't remember off the top of my head, but basically the upside for Bitcoin is much higher than gold. And regardless, you have to start asking questions like, where's the gold in the first place? Are you sure
Yeah.
it's there? Is it audited? Is it actually in the central banks? Do we actually have this trust in governments to manage this barbarous relic, as some people call it? Is it actually there? And that's a big question. And that's why I think gold has a lot more doubts for the future of gold than there is for Bitcoin.
Yeah, well, I think 1971 proved it. The whole reason Nixon ripped us off is because people came and said, "Hey, give us our gold."
Yeah.
Was it France and Germany specifically? And they're like, "Well, you're
Yep.
gonna
That
have
was
to eat."
Charles de Gaulle. Charles de Gaulle. It was his last, one of his last heroic acts, actually, was he was telling the United States to give him his gold back. And he got it back. And that's when Nixon went off the gold window.
Say we can't have this anymore. We can't have people come and ask for gold we don't have.
Yeah.
We're off.
And Germany was trying to do it. Germany was trying to do it for like a decade. They didn't actually get most of it back till the start of the 2010s. Um, and yeah, so it continues on. And I don't think that that's gonna stop. But here's the thing: you still could have, even without rectifying this on central bank balance sheets, even though they say that they have 1.2 billion ounces of gold on their books, $2.7 trillion equivalent at the current prices, which has increased a little bit in the last couple of months, right? Went up $300 an ounce. Even with all of those doubts about where that gold might be, it still could accrete in some value, while also Bitcoin accretes in value. And while fiat money doesn't accrete in value, but also just more tickets come out, and so it comes higher in value. So let's go back to this chart. You can see that, Logan. Yep. So here's just same chart, last 50 years with this monetary base. I've showed this many times. Top 5 currencies make up, 85% of the total, or so. It's actually down to about 82%. And when I started doing this, and I've been talking with you, Marty, for most of the releases that I've been doing that, right? So it was like end of 2018. Monetary base was 20 trillion, got up to 30 trillion. Now it's down to 27 trillion. This is all a nebulous thing, Wittgenstein's ruler, right? Because we're using the dollar, but the yen goes down or up, and obviously that's making news. Euro goes down or up. So, it's hard to measure that and it's hard to think about that. But by and large, we can still see that in dollar terms, all of these currencies are inflating. So I think this is another thing that people aren't thinking about enough, is I might just be wondering when hyper-Bitcoinization or when fiat collapse. I think it can go on a lot longer than we think. And I think all three could happen at once. That is, gold goes up, Bitcoin goes up, and the fiat money print goes up. And to speak about what this little comparison that some stock to flow people have made, which we talked about earlier, this 100 trillion USD figure. Who knows, that might even be correct, even though right now the monetary base is only valued at 27 trillion. You add in gold and silver, that's another 14 trillion. You add in Bitcoin, that's another trillion. So we're a little over 40 trillion in value at the moment. I'm not sure it's going to be it's a huge break one way or the other in Bitcoin's favor. And we know that we're in the now they fight you phase, right? So I think that this could continue for a long time, is my point.
Yeah, and that's the one thing I've learned over the last decade. If you talk to me in 2013 to 2015, I was a young, naive, everything's melting, it's going to collapse, Bitcoin's going to hyper-Bitcoinize. And that's what and now my mindset is they can kick the can of ways in which I can't even fathom. So it can go on forever. And now I'm wondering, I'm like double jinxing myself. I'm like, now that I'm in this state of mind, is it like the time where it just like rips away? And
right. We could be wrong. We could be pleasantly wrong. Let me say my thoughts on that before we let me show you a couple other interesting ones. again, this is another kind of a cross current interest one. So this is M3. I don't even know if you've heard of M3 because most of the time you've probably heard of M2, right? It's the one that's easiest to receive from Fred, the Federal Reserve. What is it? Educational database. But they stopped publishing M3 in 2006. M3 includes all outstanding liabilities from the system. So it would be not just savings accounts and time deposit accounts and checking accounts, but it's also going to include money market funds, which is basically like a stable coin. Right? It's companies that hold dollar assets like treasuries. And most of the time, your money market funds are in your brokerage accounts, right? So they're not regulated like bank accounts. They're not FDIC insured, which means nothing anyway. It's not because of cash of FDIC insured money, but this is another game that they play, which they've started in the 30s under Roosevelt. But money market funds are not insured. That's included in M3. Also, institutional money market funds, which are not in M2, but they are in M3. Repurchase agreements, which are basically when treasury bills and bonds and notes get wrapped up in a little contract and they kind of trade like cash, but there's basically levered up treasury bonds. So all those things you put together and it's in M3. But the Federal Reserve, being the geniuses that they are, the overlords of our monetary supply, they said that it no longer conveyed adequate economic information. This was their static, their political news release somewhere in about February 2006, and it's very unfortunate because they do provide some of the information. I've recreated one here, but one thing that I don't have, which was in the original M3, and I've just taken it out, whether in the past or the future, it's Eurodollars. And so Eurodollars are offshore dollars. Those are dollars in our Panama Papers, Paradise Papers, all the offshore accounts in Europe, whatever. Called Eurodollars back from World War II. Does nothing to do with the euro. It's just offshore dollars. Dollars outside the regulation of the Federal Reserve. So that is potentially a huge number, but I don't have it. But regardless, I can calculate the rest. So I've done that here, got this M3. But let me ask you a question, Marty. We see here in 2008, had a big peak, then it fell off. And then we see, of course, in COVID, increased again, massive money printing, to where in 2008, the peak before the crisis was 16 trillion in M3. Again, without Eurodollars. But Eurodollars at the time weren't that big. They're probably much bigger now. It's like 500 billion or something in 2000, in the old Federal Reserve numbers from 2006. Anyway, now M3, as I can back calculate it, 34.8 trillion. Do you think that it's been growing faster or slower from 2008? Don't think of it as a trick question. Is it going faster here? Just look at the chart. Is it faster or slower than what was happening here?
Slope looks about the same, maybe a little steeper.
Yeah. Yeah. So let's draw an exponential trend line. This most of finance doesn't follow it follows the exponential trend line because it's compound growth, it's compound interest. Let's draw the curve, see how it fits until 2008. Pretty crazy.
Yeah.
It's actually way slower. So it fell off a lot. And a lot of people were asking me, I did a video about this recently, like, how could that be? And well, you have to go to, well, before I answer that question, let's just show you what the actual growth rate was after 2008. All right. Certainly increased during COVID, but the growth rate is only about 6% per year, or 12-year doubling after 2008. But before, all the way up to 2008, from the, they started this data in the 60s. Paul Volcker as well was a big part of this at the Fed at the time. A few other, a lot of other economists, but he was one of the famous ones. They started to, put these different money supplies together. This is the most broad money supply. And all the way up until 2008, it was growing at 8.5% per year. If you put that on log scale, oops. Let me just do it there for you guys to see that. So you put it on log scale, it turns into a straight line. That's how you know it's compound growth. Basically, it just means constant growth. And yeah, you can see it's pretty wild. but the M3 money supply is not growing. It's not like, you talk about money printing and things going crazy everywhere. It's actually not happening in the M3 broadest money supply of the United States. So that question could be, where did it go? Well, it went right here. So this is the assets of the Federal Reserve. We can see it's a complete opposite of what happened with M3. So here, I'd ask you the same question, Marty. The Federal Reserve's balance sheet until 2008 grew at
This one's going to be
6.6%.
harder.
Yeah, it grew at 6.6% per year. What do you think it was here? 9.8% per year from 2009. And
It's such
that
an
is a trend.
accounting gimmick.
And that is a trend that's going to be very hard for them to get back to normal too, because the market is used to that. I mean, there's going to be so much pain, so much bankruptcies, so many things. This is the zombification of the economy right here. And
In chart
you can
form.
say, yeah, okay, well, actually, it's not so bad and not so much money printing here. But this is the base money. This is the stuff that's equivalent to Bitcoin. Again, this is total assets. It's not the exact thing as monetary base. Monetary base is on the liability side, but it's basically the same thing, except it actually includes this reverse repo account, which is a whole other thing. It's basically repos for non-banks, for money market funds, hedge funds, other institutions. And so if we put this on log scale, we can see that, you can just see it's a totally different monetary epoch than anything, all the way through its entire history. A little
And
bit
again,
elevated World War II, but yeah.
going
Sorry, go
to
ahead.
left side of the bell curve, caveman chart analysis here. It's just like looks weird. It's like just something is
The MMT crowd says it's no problem. We can just
yeah.
continue it. We owe it to ourselves. It's absolutely no problem.
Yeah, it
But
looks like a
the
cancer
easy,
on the chart.
the easy response to that, by the way, which I've heard people ask them this question, and they always dodge it. You just have to ask why this sort of money printing doesn't work for the likes of Zimbabwe, Belarus, Argentina, Brazil, Iran, because it doesn't. And it's literally the same Keynesian economics that every one of us who studies Austrian economics knows. It's just like even more extreme, pedal to the metal, exactly like this video. They don't even know how money printing works, and these MMT people says no problem at all. Do it even harder, faster.
Well, it's
It's
not even money printing. I can understand money printing being somewhat hard to explain for somebody with MMT brain, but he was being asked to explain like treasury auctions, debt issuance. It's like it's
and
debt
he was completely mixing it up. I mean, in its pure form, a treasury auction should have nothing to do with
with
the money
money
printing.
printing. Yeah,
Nothing to do
people
with, they print the money, they buy the bonds. He was saying all this stuff. Like, actually,
yeah,
no. In a
people give
treasury
you money
auction,
they already have
yeah,
in
it's
return
already
for.
exactly. It's not. There's nothing exogenous to the system. It's the money's in the system. Some banks that hold pension fund money decide if they want to buy this bond or not. If they want to, the price might rise of the bond. If they don't want to, the price might have to fall for the bond. Uh, but it's just markets, supply and demand, and what people might want. The exogenous problems, which is another reason why. There's another thing. This is the bottom line with this. I've said this many times, but still, this is the bottom line with this monetary based stuff. People is if you're speaking to an economist and doesn't know that the definition of the monetary base is, first of all, physical currency and bank reserves, you can just forget them right there. But there is a word, like an old economical word for this, and it's called outside money. And the original monetary base of the entire global financial system was silver first, then it was gold. Also in between, there was some, copper, bronze alloys, but it's actual real goods, commodity type money that they could hold. And then on the margin, in the economy, the fiduciary economy, this goes back to like Roman times, even before, you would have different types of ledger based money, different types of receipts. And that's all that there is. So everything, like you just said, it's already, it's not that they issue the bonds and they print the money. That's never how, that's not normal economics. It's normal. If you want to go into debt, you're going to have to go into debt, and it has nothing to do with printing money. It's someone giving you money that they already have endogenous in the system. That has nothing to do with the monetary base or money printing. It's a completely different thing. So the monetary base is outside money. It's exogenous. Only the central banks can do it in our modern fiat world that's fully exploded in 1971. The only other assets that are like this are silver, gold, and now Bitcoin. So those are it literally, it's in the name, outside money. Bitcoin is outside money. It's outside the banking system. And if an economist can't go through that, disentangle that for you, then they have no idea what they're talking about. And
Not only an economist, but the head economic advisor of the president. He's literally running economic policy for the country. He doesn't know how treasury auctions work.
It's incredible. It's incredible. So,
should we be scared or should we laugh or both?
I'm glad we have Bitcoin, man. I'm glad we have it.
It's
so
the
this I can.
You got to pull up the Ralph meme. I'm in danger.
Yeah, yeah. This just. Did you see this, Marty? Did you like it?
I did. I like the production behind it.
So we got some good a bar chart race here. We got gold, silver, and Bitcoin. You can see it from the end of the gold standard. There's also here we got.
We just lost your audio.
Oh, sorry. I'm not going to play it then. You hear me now?
Yeah.
Okay. So another one here is another one I was happy to create for everybody. So I divided it up between the top 4 banks, how much money they print, and the rest. So it's in my analysis, it's 46 banks because I do 50. So the smaller central banks and then the big 4, and then gold and silver. And you can just see that as it goes 50 years. These are the real things you should think about when you worry about inflation, you worry about bonds, and they buy the bonds, they sell the bonds, they print the money. Like people that don't understand any of that, just look at what they do, not what they say, what they do. See how fast actual apples to apples money that's comparable to Bitcoin grows versus Bitcoin versus gold versus silver. And by the way, again, gold, silver, they have continued to have the same stock to flow ratio for like 100 years, more than that, hundreds of years. And it just doesn't line up according to these old stock to flow models. So I don't take much stock in that, but you can still see it. You can see how gold's been about 1.8%. Silver's actually better. It's better than gold, just because the nature of how much silver there's already out, 1.5%. And then Bitcoin, you can see how it comes down, of course, because there was no Bitcoin on January 3rd, 2009, to the almost 19.7, right, million that we have right now. And you can see that growth rate is pretty comparable at the moment to gold's. So outside money, completely different. And that's the big picture that I would just, I would encourage our viewers and listeners to just not worry about that. Here's my site as well, just to pump this. I have no trackers on this. I really have improved this over the last year. A lot of people have been wanting to see more interactive charts. So you can see it. You can see here the top 10 assets, the breakdown between actual physical cash and bank reserves. You can see where they rank. You can see gold, the different things like how much gold is in central banks, how much is in bullion, how much is in jewelry, how much is in industrial usage. Same with silver, Bitcoin, different address, different spending levels based on how many years it's been in a certain UTXO. Even if you want to compare Bitcoin to stocks, all right, Bitcoin is number 7 in the world right now if you want to compare it to stocks. Bitcoin doesn't compare to the stock market, but it's incredible that Bitcoin is the 7th largest asset in the stock market worldwide.
I think it's a good comparison too, because most people are using stocks as their savings vehicle.
Yeah, it's something to see. It's why I have it on this page, this top money page, but it's not, it still is, you cannot, just very simply, you cannot send your Apple shares of Apple to a friend in, Australia or something. You just can't do it. It's not money like that, but you certainly can do it with Bitcoin. So many reasons why it's not. It certainly is stocks or store of value. But anyway, I got it all there. Top 10. I got no trackers on the site, and I got my BTC Pay donation there. So if you want to donate that way, but they got all the uh, the breakdowns basically. And then yeah, with that, I don't know. You want to go to this?
Yeah, but I want to the MMT
All right,
people. Like,
let's do it.
I think
Tell me.
that's. I mean, going back to that complete kerfuffle, this guy not being able to explain treasury markets. I
Yeah,
think they intuited like what. I think what he was really trying to explain was the monetization of the debt, and he couldn't like connect the two.
right.
And that's where the outgrowth and the where the system is perturbed is that fine detail in the Fed monetizing the debt. So the treasuries have been issued exogenously or not endogenously. People have taken money
Endogenously into the
that
system. It's
they have in
completely
the
connected.
system.
They sell it to the system, the banking system, the people, pension funds. Yep.
Yeah. And then where things get corrupted is when those treasuries, the auctions have already been conducted. They're free floating on the market. And then the Fed prints money to buy those from the free market. Like that
Yeah,
monetization of the debt.
yeah, and I know we've talked about this before. Like what you need to think about when you see this, and this is just the United States, right? Other central banks do this as well, of course. Learning from the United States, also Japan, which had major fails in the 1980s. Um, what you need to think about when you see this black line, all right, which has been as high as almost 30% of the debt, now down to 20%. You think about this is the level that it has taken for the United States government to be happy with the price floor that the Federal Reserve creates as a buyer, that the Federal Reserve creates as a artificial demand buyer of bonds. Because if the Federal Reserve wasn't there, not even presumably, just in economics, if the Federal Reserve wasn't there, you would not have that buyer. And the price would have to fall, i.e., the interest rates would have to rise. The United States would have to spend more of its tax dollars received on interest payments, and they'd have to pull everything back. It's the natural. This is how the market works. When you have high expenditures, it's very. This is not even economics 101. This is just capitalism 101. Like if you have higher expenditures than you receive in income, you're going to go bankrupt unless you either boost the income through productivity or growth or tech or something, or you cut your costs. That's the only way to do it. But you and I and everybody else in the market, we don't have the luxury of having the monopoly on the printing press. And so this is also why it's completely nonsense to say that the Federal Reserve is an independent body
Yeah.
of the Treasury. It's clear they talk to each other, they know each other. It's just complete nonsense to say that the Federal Reserve is just it needs its independence and whatever. This is an institution that over the last 50 years has bought anywhere from 5%. And by the way, I can inform listeners and watchers why it was so low here at the global financial crisis. 5% to as high as 30% of the debt at any one time. That's how much they have owned of the United States debt. And if they were not there, the price would just simply be lower. The price of bonds would be lower, the yield would be higher, and it would be harder for the United States to service their interest. This little dip, by the way, of the this was another sleight of hand they did. Uh, this was the bailout of Wall Street. So they actually unloaded their this is before QE sort of took hold as an idea. They unloaded some treasuries off of their balance sheet, and they bought corporate debt. So this is a lot of corporate debt. This is the TALF, the TARP, all these government programs. It made Wall Street, I mean, some failed like Lehman, but most of them were made flush with cash, a ton of government guarantees. And then eventually they got those corporate bonds off of their books on the back of just massive government guarantees. And that's how they sort of saved Wall Street there. But then they had to go back and bail out the government as well, because there was also what they did is they took on a lot of this M3, back to what we were just talking about. They took on this M3 money, which were these mortgage-backed securities. And so that came on as well, which was just a huge component. It's still on their balance sheet, trillions of dollars of mortgage-backed securities. They're just absolutely worthless pieces of paper that the housing bubble was all about. And that was, again, just bailing out Wall Street. So, and bailing out the government, because you know, the government printed a lot of, the Treasury issued a lot of debt during the QE1, QE2, QE3. It's basically the United States Federal Reserve taking a larger and larger portion of the debt balance during this crisis. And again, it's just so systematic, smoother lines here. Ben Bernanke telling we're going to do whatever it takes. Mario Draghi saying we're going to do whatever it takes in Europe. And you can see here the Federal Reserve only started and opened its doors in 1914. And you can see even here at the beginning, it came right on the heels, or exactly when World War I was happening. Even with a big increase of debt of World War I debt, Federal Reserve was mostly financing companies at that time, which is interesting. It's very different than what happened. That those things had to change in the Great Depression, but most of what they were doing here at the beginning was very little government debt they held on their balance sheet. It was only corporate paper that they owned in the early days.
Well, I mean,
Yeah.
it's again, it's an example of something that was launched, had a particular mandate, tried to stay close to that mandate early on, and then fast forward to today. And I think that's the important message, going back to these MMT people and how they fundamentally misunderstand this, and whether it's how money's created, how the treasury market operates. It's really the sleight of hand in framing and propaganda. Like the Fed is marketed to individuals today as the lender of last resort for the banking system, with the dual mandate to create price stability and make sure that we have a good jobs market. The one thing they leave out, their market is this lender of last resort to the private banking sector, but they're also the buyer of last resort of this public debt, which is a very important thing that really enables a lot of the irresponsible fiscal spending that we are witnessing today. And again, to your point, Matthew, it's like the like
Floor.
the floor that they're able to set. Like, it's not a free market operation. It's not independent at all. The Treasury has an account at the Federal Reserve and vice versa. Like, they have essentially morphed into one being at this point. And there is no free market. The monetizing of that, it was MMT guy completely fucked up because he didn't understand this very minute detail, which is the Treasury issues the debt at auction. It's bought by the free market, and then the Fed will come in on the back end and buy that debt from the free market with newly printed money. And that's how this gets into the system.
And here's another thing I wanted to point out. So this is federal debt, and now we're looking at the 19th century. Okay, so 1800s mostly. Because we got a little bit of the 1700s, just for people that are listening. We got Civil War, massive explosion of debt. Okay, went up from $60 million, all right, to to 2.6 billion. Obviously, the South was destroyed, so it was a lot of debt actually to fight the South, but also to help rebuild the South. But what is interesting here is this was an explosion of after the Civil War. What happened in the United States was the strongest economic growth in the history of the world, still until this day. You can argue that China has been matching it from, like, say, 2000 to 2008, but they also, as we know, have a lot of like ghost towns that are completely funded by debt as well, and they have a lot of problems there as well. So this was the strongest growth in the history of the world. I'm not showing the growth rate, but what you see here to the debt level is it was flat or even down. So this period here, the latter half of the 1800s, it proves to you that you do not need a bloated government. You don't need a nationalistic government. You do not need a nanny state. You do not need people taking care of you, paying for everything. You don't need 50% of the economy, government employees. The debt can actually go down or be flat, and you can have the greatest growth in the history of the world. So I think that's another interesting lesson just to think about. Economics is still economics. It doesn't matter that there wasn't an internet at that time. Just hard work, productivity. sound money as well. Of course, gold standard was going on at this time. Even the classical gold standard, which was a very brief thing, but started here, actually in the United States in 1873. Went until World War One. So, another good example.
Yeah, we can do it. Would you consider MMT economics or some voodoo science?
Fernando, my old co-host, used to call all of it voodoo, and I think he's probably right. I mean, you know, Mises uh, Mises was trying to divorce the sort of political thoughts from the study of catalactics, as you call it, or study of prices, and it's hard to do, but uh, I think that clearly is a better it's a more pure way to look at the economy. Is like, okay, we have the state here, it's clearly monopolized, whether you like it or you don't like it, it's a monopoly, and any institution, including the central bank, that operates within it is a monopoly. It's going to do certain things. Maybe we all agree that everybody needs water and plumbing and electricity, and we need to really artificially keep the prices down. Of course, you're also going to artificially keep the quality down as well. That's what you're going to do when you do these things. But that was one of the things that he was trying to do a lot, was basically to give that pure definition of what an economy is with or without a monopoly. I think he was the first one to do it. And he said that, there is no such thing as a natural monopoly. It's not like this. And Tom Woods writes about this as well. It's not like this monopoly man going around. That's not, with just sacks of cash and running around trying to raise rents on everybody. That's not the definition of monopoly. And that's not how it worked in the past. A monopoly was literally only from the days of Adam Smith. A monopoly was a firm that had a special privilege from the government. And once you understand it in that way, I think that's like true economics. That's a true study of prices. You can see the prices are going to react one way when the government is involved versus react another way when the government's not involved, as we see very clearly here in two different centuries of the United States with the money supply. That seems to be a better way of looking at economics than, as my friend Fernando says, this. It mostly seems like voodoo stuff here. And when you watch that documentary, man, even the clip, you can see it's pretty voodoo. They don't even know what they're talking about.
Yeah, well, they don't, and that's white pills. Giving out white pills. But with that being said, look at when you pull up this tweet, the conversation around economics in the general public, that's another thing that these people have done, is really blur the line of what is like a true free market system. And people want to blame the capitalist for all the problems that exist today when it's really driven by central planning, the problems. And here's a great example of this. This guy was tweeting yesterday, if you ever want to know why capitalism sucks, think about how many people you've known who want to open a 24-hour coffee shop and bookstore with a cat if they ever get rich versus how many don't do that. You're saying capitalism is causing this problem. And then Jake Gata quote tweeted him with places where it's legal to open a 24-hour coffee shop / bookstore with or without a cat in San Francisco and Green. This isn't capitalism. It's state central planning gone horribly wrong. And I think this chart is a perfect indication of the misconceptions that people have. People are blaming all the problems on quote unquote late stage capitalism. It's like, no, it's actually late stage central planning.
Yep. And I think that's, to me, that sums it up. Like look for the monopoly. If you see the government involved, it's probably going to cause higher prices. It's probably going to cause lower quality. We may agree that it needs to happen. And when I say we may agree, I know that nobody listening or watching the show right now agrees with me with that statement. I'm just saying, this is what they say. This is their shtick. This is why we need these things. This is what they say. But if you can really try to focus in and laser in on what the government is doing versus what the market would be doing, I think the problem is usually clear, like that chart perfectly, or that picture perfectly shows. And then again, I would just bring it back to the money stuff. That's why it's really important to understand what money supply Bitcoin is comparable to. And it's only comparable to the exogenous money, i.e., the outside money, i.e., either the central bank money or gold or silver. And Mises also makes this point. I mean, they all make the point, as far as I know. Rothbard was kind of a hardcore gold guy, but at least when you talk about economics of what market money the market might choose, they don't necessarily say it has to be gold, but the market has clearly chosen gold, over the last couple thousand years. Like platinum, I know platinum's risen above in price per ounce of gold recently, but it used to always be below gold, platinum. But there's less platinum in the world than gold. Above, like, platinum is more scarce than gold. So you would think the platinum would always command a higher price than gold per ounce, but that's not the case. It wasn't the case in the past because it just, because of the malleableness of the metal, the availableness of the metal, all these, the saleableness of the metal, gold won out. So again, it's just trying to look at what the market chooses versus what the state chooses. And it's a very interesting time. It's a very interesting time we're in, because in the last 50 years, we've seen gold completely go from being adopted by the state, controlled by the state, to just paper money, digital money on a ledger, to now we have this amazing decentralized money, Bitcoin. And yeah, we're definitely in the now they fight you stage. I think we're definitely
Yeah. I guess that's a big question. We could segue into the Bitcoin charts, but also prefacing the charts with, I think it's clear we're in that stage. Can we win the battle? That's what I've been reflecting on the last couple of weeks, and I do think a lot of the actions that have been taken into session, very scary, obvious chilling effect on the industry. But again, white pill, silver lining. It seems like they're rushing a lot of this stuff, which would signal to me that they're somewhat desperate. And how much of what they've been doing over the last couple of months is a projection of strength while they're in a stage of extreme weakness. That's something I've been thinking about. Because should we be taking the fact that they're bringing the fight to Bitcoin, particularly self-custodial private usage of Bitcoin, as a signal that they are extremely vulnerable right now?
100%. And for those that have been following me long enough, I'm a fan of free banking, but free banking as well, something where the central bank is just not involved in a society. There's been many societies, Scotland and Canada, even all the way until the 1930s. Canada didn't have a central bank. Sweden for a long time didn't have a central bank. And many countries in South America, in the Far East as well. I mean, countries, different polities at different times. It's pretty clear that the market has usually chosen gold, which is fine, gold or silver for smaller transactions. But it's okay to have a fiduciary layer on top, right? And we talk about this in scaling Bitcoin all the time. What's the best way to scale it? Unfortunately, the free banking system, which I think has always worked well, has also, just as gold has been co-opted over the last, depending on how you want to count it, less couple hundred years if you're Britain, less 100 years if you're the US, because gold has also been co-opted, and the banking system from 2008 is really consolidating. It's pretty close to, we can start to say, where even free banking is failing as well. So that's why you need a true outside money again, a true decentralized alternative. Obviously, that's Bitcoin, but with all this stuff, with scaling transactions, with everything, at the core of it, regardless of how fast Lightning adoption will come, and I think it's awesome still. I know a lot of people complain about Lightning, but you just got to do everything. Yeah, there's a lot of different great stuff, Fedimint and all this stuff. People complain about Fedimint as well, but all this stuff is great. I think it's all fantastic, and it's going to come. But to me, it's actually not the main interesting thing, as maybe people can figure out, because I talk about the monetary base all the time. It's the core of the system, the UTXOs, the outside money. And if you really want to protect yourself from this chilling effect or whatever, don't, it's very easy to reserve Bitcoin. Just take custody, use multi-sig, maybe go multi-jurisdiction. You can do a lot of different things there. But it's very easy to, where it's easy, it's kind of easy to do that with gold, but it's also kind of cumbersome. And a lot of people didn't do it, and the system became monopolized. So again, that's the point of the exhibit as well, of all these exhibits with the monetary base. But this is a little bit of a changing gears now. It's just back to the Giovanni talk and the Bitcoin power law. It's a 95% R squared. It's fantastic. It's been working for a long time. I started this, like I said, in 2018, so it was falling off of the 2017 highs. And again, as you add each new day of pricing data, this is not a fixed model. This is not any technical analysis, whatever. It's just the line will go up or go down based on new days of pricing data. So it was a little bit higher actually in 2018, but not too much higher. And really, as we talked about this before, I don't have that chart kicked up and ready. More or less since 2016, this line has been more or less the same level that it is now. All right, so that's important. Think about it from all the way here, the year end 2016. If you just keep making and adding more data, changing the coefficients, we don't have to worry about how all that works right now, and just think about when the price goes above the black line, the line's going to lift up. When it goes down, it falls. It's been more or less the same since 2016. So you can see right now we're right on trend, and we hit trend, fell off it a little bit at the end of April. Then if we draw these bands, 1 sigma down, 1 sigma up, we can see what happens most of the time. 1 sigma means 2/3 of the time. So that's how I'm defining it here. And we've talked about this. I think I remember last time, it's not a bell curve finance. So you can see that there's a little bit more air at the top because to count each it's like 33% that I'm using. So to count each 33% above the trend line and 33% of the time below the trend line, you got to have a little bit more space above to catch it. All right. And so that's all I'm going to try to do on statistics now. But then we go 2 sigma down, 2 sigma up. 95% of the time, the price is going to be inside these bands. All right. That's not a guarantee, not financial advice, but this is a very interesting thing that Bitcoin has been doing. It's been inside these bands 95% of the time. And then, of course, the cool thing is you can project out of where this might be. And so if we assume the 4-year cycles, December 2025, somewhere like that, the trend line itself, 125,000, 1 sigma up, which we hit in 2021, is 100 and let's say 130,000. Oh, sorry, 277. Yep, thank you. So the trend line is 125,000, 1 sigma up, 270,000. 270,000, and then we go 2 sigma up, which is crazy territory, which we actually did not hit in 2021, but we did hit in 2017, we did hit in 2014, and we did hit in 2011. 2 sigma up, that's where you get to the $800,000 number. Again, I have no idea. I'm not a chartist. I don't look at waves and Elliott wave theory and all these different things. It's a very interesting, simple model that I think, if anything, it shows more adoption than anything else. Because again, price is a beautiful thing, intersection of supply and demand. End of 2025, we know Bitcoin moves in roughly these 4-year cycles, roughly a year after the halving, roughly. $120,000 is the trend line.
Yeah, and to your point, too, I think the fact that this trend line has been somewhat stable since 2016 really validates one of the core theses that many Bitcoiners pitching Bitcoin from a monetary perspective put out there, which is liquidity gets more stability. And the fact that we've been on a pretty consistent trend for almost 8 years now, I would say, like, yes, there's more liquidity coming. It's becoming more stable. Obviously, it is still volatile, but on this power law regression analysis, if you zoom out and look at these power law trends, it seems pretty relatively stable, if you will.
Yeah. So it's great. It's very exciting. I think it's a good guide. And you can see this as well. This is what I wanted to say before. You can see this on my website. And I can't show it. My little charting engine here is, I still got to work on the callbacks, but I have it here. If you want to just play, a lot of people have been asking me about this for years. I finally have it here, so you can play with this yourself. It's only on a monthly frequency, but you get the idea. It goes all the way out to the 10,000th day of Bitcoin, which is in the month of May 2036. And in that example, in this power law regression, it's $2 million per coin, all the way out to 2036. But I'll let you play with the 1 sigma, 2 sigma bands, dear viewer or listener, if you want. Here it shows you the coefficients. All right, this is the big number, by the way, is the slope or the rate of change. This is the exponent that it grows to. It's close to 6. You just keep that in mind, and that would, if you have stronger power laws, there'll be a higher number. Lower, there'll be a less. But that's just something. And then, of course, here the log. This is what I wanted to show is you can sort of see how this almost seems like it's decaying, and it is decaying. The rate of growth is getting smaller, but it seems like it's decreasing more than it is actually. And if you can, to understand that, if you put both the y-axis and the x-axis on log scale, and this is showing days now. It's the same chart, but I'm just showing days just to show you how it compresses. So here we're in, day 5,500 roughly of Bitcoin. 5,600 roughly of Bitcoin. You go all the way out to the 10,000th day, you'll get the same numbers and everything. But you can see that, it's expanded on the left-hand side, it compresses on the right-hand side, and it will give you a better view. Power law, just like exponential turns into a log, into a straight line on log linear or log scale on the y-axis. If you do log on both axes, power will turn onto a straight line. So that's the gist of the power law. And I even show some helpful things here about how the growth rates have changed of the trend over the years. You can see that the doubling time. And this will answer, again, we'll go back to your question, Marty, is if you looked at prior year trends, so this last column, can you see that? The last column on this
Zoom in a little
table?
bit if you can on your end.
It's going to be harder on my end. Can you do it, Logan? Maybe not. I know. Hold on.
There we go.
Hold on. See it now?
Perfect. Yeah.
All right. So this is an interesting column, in my opinion. If the prior year-end trend line held, all right, so just looking at the trend line, if you calculated it at that year-end, what would the Bitcoin price today be? So back in 2010, we had a crazy trend. All right, Bitcoin was going from nothing to something. So that you're not reading this wrong. It actually would, on the 2010 trend line, it predicts $2.4 billion for Bitcoin. That's a price for Bitcoin. So we're not on that trend, unfortunately, anymore. Maybe we will be at some point, but we're not there. $100 million would be the 2011 trend. Okay, and think of this as a cumulative thing, right? So it's just you're not just looking at that year. You're looking at, when I say 2011, it's 2010 and 2011, so on and so forth. But you see, all the way up until 2015, you got high numbers here, hundreds of thousands. But then look at 2016. This is what I was saying earlier. Look at the price projected based on the 2016 trend, 70,000. 2017 trend, 80,000. 2018 trend, 96,000. 2019, 85. 2020, prices coming down before COVID, 76. Price goes back up, 21, 91,000. 82,000, 22, 23,000, 72. And the all-time trend is this last row, 71,000. So we're right on trend. This is, I think, a good message it's a good hodling mentality message. It's a good non-FOMO message. Look at what the price was projected by the same trend in prior years, and you see how strong the trend line itself is. That's what I'm trying to show here.
Yeah,
with this column.
The variances of the different trend prices at the end of each year is definitely constricted.
Yeah, much less than the early years where you're at, a bit optimistic values, let's say.
$2.4 billion Bitcoin wouldn't be bad.
Wouldn't be bad at all.
Probably wouldn't be here talking about all this, but
we're gonna. I think we said this one time. We're still going to be doing this when we're like 60, Marty. So
I know. It'll be fun.
it'll be fun.
People are going to need education. You're going to have hyper Bitcoinization. People are like, what the hell just happened? And at that point,
Exactly.
we're going to have to keep
Exactly.
having these conversations.
We're running long. I don't know how much time you have.
My call got canceled, so we're good.
Okay. Just a couple more to finish up. This one I think is important because, again, talking about seeing the big picture, not freaking out. Fees, obviously. All right. And again, I know that this is a big issue. I know, like, I don't want to sound Pollyannish. I don't want to sound that it's not a concern what developers have been dealing with, all the way from a year ago with BRC20 ordinals to inscriptions and all the different buzzwords that you can do on Bitcoin with data these days. But basically, let me just take this off really quickly. It's just price per transaction per day average. I know that the Satoshis per byte is the native unit of Bitcoin, but I've only had a few days really where it's been like above $10. All right. It was in the 2017 boom. I say a few days. Okay. We've had, I want to be sensitive here. Yes. We have had some months where it's been above $10 in 2021, in 2017, and it started a year ago again. Okay. And then, of course, this is the halving date. Just insanity. Averaged $196 per transaction that day. And I know that's, there were some blocks that were just all fees. I don't know. It was crazy. It was crazy, as you know. But that's a lot of noise. I still think that's a lot of noise. The best thing, and what I always try to do is
it's a lot of noise.
Dampen this by looking at how this looks over the trailing 12 months. So here, I'll do it in dollars. Now switch your brain a little bit. This is not only fees, but it's fees and issuance. So it's new coins. And as we know, new coins, even with a very small proportion, 3 and change of block reward that is coming out every 10 minutes, from when it was 50 back then, it was still based on the USD price at the time. Even if you rolled it over trailing 12 months, the vast majority of miner revenue is the block reward. Okay. The only time that happened again, where it was not so much, was still the majority, super majority, was in 2018. The trailing 12-month issuance component was about 82% in 2021. May, June, got down to 89%, and now. So we're back to about 2021 levels. If you look, I can get that zoom button out of the way, but if you look here, we're at 91.2%. I think that's just a better way to look at it. All right. We've been here before. It's not something we haven't seen. Again, not to be Pollyannish. I know that there's a lot of developers that are working hard to make fees more affordable for many people. There's a lot of developers that actually like fees taking over as and this is going to cross, by the way. At some point, nobody does win, but this green line is going to go below 50%. And it's not going to be a smooth event. Sure of that. It's probably going to be volatile. I don't suspect it'll be a smooth event, but this is in dollar terms. And then if we look at it in Bitcoin terms, just native units of Bitcoin, it's almost the same thing. Okay. So this takes out even the volatility, so to speak, of the dollar. Although you can't really do that because, of course, the reason that there were so many Bitcoins trading and fees were higher, even in Bitcoin terms, was, of course, because of the dollar price. I understand that. But still, in Bitcoin terms, it was 86% was issuance in 2017, 2018, 89%, almost the same in 2021. And then now a little bit higher, as usually as 92% in Bitcoin terms is actual issuance versus 8% fees. So for miners, they're still on a trailing 12-month basis. The vast majority of their revenue is the block reward.
Are you worried about a few market developing? Let's have the conversation. I think there's a lot of noise out there. I think people are being completely impatient, and I think there's a lot of opportunists out there that are trying to incite an existential crisis to get things through that may not be advantageous in the long run. I'm not worried about a fee market developing. in any way,
Yeah.
shape, or form. I don't think we've even begun to climb the wall of adoption that we expect will happen. And when that does happen, people are making economic transactions on chain, the
Yeah.
fee market will develop.
I view it like kind of like mining centralization, kind of like lightning, kind of like Fediment. I mean, there's a lot of these big ideas or big concerns that no one person has any control over, and years can go by, and like no one even knows the difference, from one year to the next. Uh, it was true that in the early days, I'm more concerned or more interested in your thoughts actually on mining centralization than I am on the fee market, because well, basically to answer your question, no, I'm not. I don't think about it. I'm not worried about it. And if you just see this, the Bitcoin network can function fine. Yes, it faces some periods, most notably on these sort of 4-year cycles, which is we're maybe a little bit early, you can say, but look how this one started to go down in January of 2017 at the beginning. But yeah, we're a little bit early, you could say. Now you're in mid 2024 when the 4-year cycle should be end of 2025, right? But I don't know. No one knows. No one knows when these are going to cross. And what I do predict is it's going to be volatile. Like that's a pretty volatile day right there on the halving to have an average of $200 per transaction, even though I know that the actual numbers were crazy on the top end versus the low end. But that's all I got to say about that. I'm more interested what you think about mining centralization, because I think that's a conversation that's coming back. And maybe it was actually kind of a risk in like 2014. Not sure if it's a risk now. We also see the feds coming in saying that the mining equipment is a
Yeah,
potential national security issue.
did you read that newsletter?
Which
I read
newsletter?
I read a newsletter about that last night.
I didn't.
Mining centralization.
Somewhere. I
I
tweet
think
somewhere.
my I think the mining centralization conversation, as with many things in Bitcoin, very nuanced. So we have to define the different points of centralization within the mining ecosystem when it comes to hash rate ownership in terms of the individual companies or individual people that own ASICs. I think that's pretty sufficiently distributed right now.
Right.
Obviously, we have some mega miners here in the US, but I don't think it's getting anywhere near the point of centralization where we have to worry. And you go up a layer, geographic distribution of that ownership of hash rate by multiple players. I think that's doing pretty good. Obviously, we've had a heavy concentration here in the US over the last 5 years 4 years post Chinese mining ban. But I think that's beginning to work itself out just from pure economics. And then you get the layer up, which is the mining pool layer, where these hash rate markets we're aggregating to increase the variance of different individually owned mining operations. And that's obviously where the most centralization exists. And arguably, it's that layer and then the ASIC chip manufacturing layer. Those 2 points of the mining stack are the most centralized.
Mm.
It became apparent last month that Antpool is acting as a central bank of the mining pool layer. We discussed this on RHR, but for anybody who didn't watch that RHR, essentially what's happening is, again, in an effort to increase, or not increase, but remove variance risk for payouts for mining operations. The payout scheme of choice that has begun to dominate the market over the last few years is FPPS, full pay per share. The trade-off that miners make in this model is they say, hey, I have electricity bills to pay. I have employees to pay. I need to make sure that I am getting a consistent revenue stream so that I can pay those bills and pay my employees. So full pay per share is a payout scheme where miners pointing hash rate at an FPPS pool get payouts every day, consistent payouts, and they're getting paid out based off of a moving average of the total block reward over a certain period of time. The trade-off there is you get paid out consistently, but you may not reap the benefits of the full block reward if you have a run of blocks with abnormally high fees. You may not benefit from the full economic, the full economics of those higher fee blocks. That's on the mining side. On the other side of FPPS, the mining pools are making the trade off of, hey, we're probably going to get more hash rate if we can provide the service of paying out our customers on a daily basis. But they have variance risk as well as pools. They have streaks of bad luck, and to ensure that they can pay out their customers on a daily basis, they need to have a Bitcoin treasury that they can dip into during periods of bad luck streaks where they're not getting revenue on the pool side. So that's created this capital structure at the pool level where a bunch of the FPPS pools, speculation, but I think it's a high degree of certainty that this is what's happening, did not have a sufficient Bitcoin treasury to pull from to pay their clients. And so many of them have gone to Antpool, which is one of the largest mining pools in the world and is a subsidiary of Bitmain, a very well capitalized hardware business. And they've essentially come hat in hand to Antpool and said, hey, we don't have a big enough Bitcoin treasury. Can we leverage the Bank of Antpool in your treasury to pay out our customers? And it seems that Antpool has said yes. However, if we're going to do this economic arrangement, you need to use these particular block templates and transaction prioritization lists that we will feed you. And that has led to essentially this mother pool that is Antpool with a bunch of other pools that are proxying into it, and they're all using the same block template and transaction prioritization lists. And so that's very centralized. I think some estimates I've heard behind the scenes that the Antpool, mother pool, and proxies proxying into it control somewhere between 60% of hash rate, around 60% of hash rate, which is obviously not good. There's this mirage of a division of labor between the different pools, and they're made to look separate, but in practicality, they are the same pool using the same templates and same prioritization lists, and then even the same payout wallets as well. Not good, but I don't think it's existential. I think this is a capital markets problem that can be solved by the free market, where instead of, I think the problem is that the mining pool industry is so opaque to outside investors, particularly credit investors, and these players have been forced to go to their competitor to get a credit line to pay out their customers, and then that competitor has leverage over them, and so he's using that leverage, and you can't blame them. It's just the incentives that they're working with and the way the market is structured right now. I do think that can be solved in many ways. Maybe you have Bitcoin banks pop up that these other FPPS pools can go to get credit lines to pay out their customers, so they're not forced to receive block templates from Antpool and transaction prioritization lists. They can begin doing their own block templates. And then obviously there is the option of more pools popping up to create more competition at the pool level where people can point their hash to. And then you always have the fallback option where the network is forced to just stomach the variance risk and people just mine individually. It is a problem. It's not good. Definitely not good optics. And I don't trust Antpool and Bitmain as far as I can throw them. And you could see with the amount of hash rate that is proxying into Antpool and the amount of hash rate that Antpool has, at some point there could be a situation where blocks are being censored. But that's the beauty of mining, is that you have the optionality and you always have the fallback option to where if you think Antpool is acting nefariously, you can simply point your hash somewhere else. I don't know. What are your thoughts?
Well, I agree, but I think I would still start with the premise that usually, since there is not a government involved, I feel much better about it. But yeah, it seemed like a risk in 2013, 2014, and then with Antpool again with Antpool, not in 2013, but with Antpool in 2017. Obviously, leading up to to their fork, to their Bcash fork, but that proved to be a big nothing burger as well, and so I still come at it with the premise that there's got to be some free market solution if like you said, not only the optics, but the economics of this arrangement and I don't know, the sort of the Bitcoin operations as well. If they get sort of all clogged up in this sort of a arrangement, hopefully, presumably, there can be somewhere else that they can have a release valve at some point. But yeah, my concern goes to more of what the state is saying about it, and the state is slow to move, but the state can still try to. I mean, at the end of the day, this is a risk of big miners. This is the only protection that miners could have at the end of the day is if they're mining in secret, and that's becoming harder and harder to do in Bitcoin. If you're like a big pool in Texas, if the federal government wants to come in and take your equipment, I mean, they can come in and take your equipment.
I don't think
and we've seen
Texas, but
I know, but I'm just saying at the end of the day, that's what a monopoly is. If they're going to start saying that, only these people can be licensed, only these people can do this. And of course, we've seen various levels of that in the past. I mean, I remember after 2017, there were some countries, I think it was like Malaysia, they were even making a fuss of all of the miners.
They were like steamrolling the ASICs.
Yeah, they were like steamrolling miners to just show that that's all bullshit. They're talking about the environment and all this stuff. Like it's actually what they care about. But those would be the things that concern me more. But I wouldn't go deeper.
To that point, let's discuss what happened 2 days ago, which was an executive order from the Biden administration to kick out a majority-owned Chinese mining operation in Cheyenne, Wyoming. And there's a bit of nuance here. I went through the executive order, wrote a newsletter about this last night. And so the order is made particularly because the acquisition of the mining site by Mine One was not filed with the Committee on Foreign Investment in the United States. And so essentially this mining operation is within a mile of a nuclear ballistics military base. And there are processes through which, if you're going to buy land as a foreigner around these bases, you sort of have to go through the processes. It seems that Mine One, the company in question, did not go through the process to file with CFIUS. And so actually, like, this is one of the few cases where I'm like, it seems like this is a logical move from the White House and the Department of Defense to step in and say, hey, we have processes. You bypass those processes. You're within a mile of this military ballistics facility. Like, you can't be here. See ya. And actually, as an American, I'm like, that actually makes sense. I'm happy you did that. The nuance here is within the executive order, the way they describe the mining equipment of Mine One is a bit troublesome. They say, as well, one of the lines is, as well as related risks associated with the presence of specialized equipment on the real estate used to conduct cryptocurrency mining operations, some of which is foreign sourced, most important part, some of which is foreign sourced and presents national security concerns. And then in the next section, they reference the presence of specialized and foreign sourced equipment potentially capable of facilitating surveillance and espionage activities. And so that's the question. I think there's unknowns right now, which is if the case is that Mine One bought this land in Cheyenne, a mile away from this military base, did not go through the processes in place to get approval to do that, and they just got kicked out, and maybe they were actually putting surveillance and espionage technology on their facility, and the government found out about that and kicked them out. Completely fine with that. Makes sense. Protect your military bases. Don't want to mess around with ballistic military bases. However, if they're sort of just catching Mine One in a gotcha, you have a situation where you have foreign nationals who aren't familiar with the legal processes and just didn't even know that they had to go through it to get this land, and the government's using them as an example. And then also sort of piling on, saying this mining equipment more broadly is considered surveillance and espionage technology. That's a big problem. Again, going back to the core language, foreign sourced. If you're in the mining industry in the United States, you understand that a lot of all the ASICs are foreign sourced from China. And then even the electrical transformers and data centers, modular data centers that a lot of these miners are housed in throughout the United States come from China as well. And so I think clarification from the government of whether or not they've determined that Mine 1 had specific hardware and technology that is not included in your run-of-the-mill mining operation across the country, that would be nice to know. And if not, if they're just determining that ASICs, data centers produced in China, transformers produced in China, are considered surveillance and espionage technologies, that's a big problem for the American mining industry, because a lot of the equipment, but the ASICs and the electrical and data center infrastructure is coming from China. And this is a product of globalization and miners trying to drive their capex down as low as possible. I mean, it's funny. It's almost paradoxical, because the reason we're buying these foreign-made products is because the Triffin's dilemma and the fact that we had to dollarize the world.
True. I mean, that's the biggest. That's the scariest thing to me when we talk about this stuff, is just it is all the things that you mentioned, but it's really, at the end of the day, it's the monopoly power again. So if they want to go into any of these states, and just like they did here, for whatever reason, and they want to either confiscate or just say you need a license, or say we're shutting you down, I mean, they can. It's physical space that's quite viewable. It's quite understandable where it is. And on the other side, of course, we have the game theory of countries actually wanting to be in the Bitcoin market because it's a good market to be in, and because they also understand the end game of, fiat currencies inflating into oblivion, and it's either that or gold or Bitcoin. So I'm not saying that it's all bad there. Even states can understand the benefit of being in the Bitcoin industry, whether it is mining Bitcoin or holding Bitcoin. But again, even there, with holding it, you have very centralized players that, as we talked about at the top of the show, like Coinbase being blessed as one of them. And, one Coinbase node is not necessarily as good as 100,000. It's definitely not as good as, 100,000 individual users across the world running their own nodes with Bitcoin on them and transacting that way. So yeah, it's, I don't know, it's growing pains. I'm not sure. I read somewhere, this is way old news, so I'm sure it definitely still holds, but the ASICs coming to market, right? And you can see, actually I have a hash rate. I think I have a hash rate. Well, it doesn't matter. When they were coming to market there in, you went from CPUs to GPUs to ASICs, all the way from like 2009 to, let's say, 2013, right? You could see the hash rate bump up each time. And then from that point, it's sort of been at the top of the trend. I'm speaking to a trend line, actually. So let me put it on here it is. A hash rate also follows a power law, by the way. So this is actually just straight up hashes. I should put it in scientific notation, but you're at a couple million hashes here per second. Back in 2009, CPUs, GPUs, ASICs. And ASICs coming to market, as I understood, I can't remember the exact article, but maybe in Wikipedia, like that was the fastest technological advancement that had ever happened.
I think
it was unbelievable.
FPGAs were around for like 3 months, then it went right to ASICs.
Yeah, so it was unbelievable how quick. Yeah, so I don't know exactly on this chart how it would translate there. I'm not as familiar with mining as you are here, but the point is, it was super fast. It was amazing how quickly it did it. But then if you look at the trend, again, I don't want to go too much on trend lines of the show, but we're still growing like crazy. Obviously, we're in 6 exahash territory, 612 exahash. Is that right? Yeah, exahashes. Yep. So massive growth, but you see like here, from 2018, it was like even though it was less, certainly well less, it was kind of the top of the trend, and it's sort of like trending down. Whatever. I don't even know. It's not germane necessarily to the conversation that you're having. The thing is, it would be cool. It would be awesome if there was some sort of technology that could, again, decentralize it, so we didn't have to worry about these problems. But I don't definitely don't see that coming. So this is something that we have to deal with, and I'm not sure how that end game looks, because if the government wants to come in for whatever reason and they want to take your stuff, they can do it. Uh,
Yeah.
that's the end game of it. Again, I don't know if it's a rabbit hole we want to go down, and you have a whole show for that. You can do that separately, but it's great. We got 600, 700 exahash per second on Bitcoin. It's unbelievable amount of security. I actually had one here, which is market cap dollars per, no, hashes per market cap dollars. All right. This is actually interesting, is that you see the trend falling there a little bit. This is a lot less about price. It's just, we don't have to spend too much time again, but hash rate is awesome. It's increasing. It's showing massive security of the network, but you can see that if you do a trend of hashes per $1 of market cap, it's kind of slowly falling. And really, when the price booms, it falls even more. So like it was here, 145 million hashes per dollar of market cap in the 2021 boom. And then it went back up. And now it's down to, well, I shouldn't say down. It's still rising. But if you look at it over the all-time trend, it's sort of like standing still. Yeah. I wasn't actually even planning on showing this. I was just looking at it, seeing if we want to talk about it. But since we started talking about hash rate, I don't have an answer to this long term. If the governments decide to just take everybody's stuff and nationalize everything, I don't know what at the end of the day, is it free speech? Is it everybody coming together? Satoshi had actually I have this quote. The quote that Satoshi said at the very early days when someone said, this might be a way to. Anyway, I'll find it. But if you have any thoughts about, government taking our stuff at the end of the day, yeah, I think that's the rabbit hole that I don't have an answer to for sure, and I don't know how much deeper we want to go down on this show.
I think what helps this is the push towards ASIC commodification, which is happening rather quickly. I mean, you had Jian Wu come out a month ago and say that he believes that we'll have 2 nanometer ASICs at some point in 2025, which would be insane. But as we reach the physical limits of the advancements we can make at the silicon level, you're gonna reach a point of ASIC commodification, and hopefully, at that point, the barrier to entry for individuals to get into the ASIC game lowers. And I think we've seen a massive trend of centralization in terms of the size of these mining operations. You have Riot building a gigawatt facility. They've got a 750 megawatt facility, and there's many other large multi-hundred megawatt operations across the United States, particularly here in Texas. But I think that megamine trend, I think, will exist in the future, but I also think we will also see the rise of the smaller miners. Like, you have companies like Heatbit out there creating home appliances that have hash boards in them to replace your typical space heater with a small miner. And I think companies like BitX and others that are providing individuals with at-home miners that they use the waste heat to do other things. I think that trend's going to accelerate as well, and that will have a material impact on the geographic and ownership distribution of hash rate. These mega mines will still be targets, and as it pertains to the state coming in and confiscating mining assets, I mean, I find it hard to believe that would happen here in Texas, particularly since ERCOT is its own grid system. Bitcoin mining has become integrated in their demand response program. It is 95% of the large flexible loads that exist within ERCOT. 95% is Bitcoin mining operations. From the conversations I've had with stakeholders here in Texas, I think the benefits of integrating Bitcoin mining into the grid system are becoming apparent. I think we are reaching the point where it is a necessary part of the electricity stack here in Texas, and I find it hard to believe that the federal government would successfully be able to come into Texas and confiscate, nationalize mining operations. And I think that's specifically because ERCOT is not connected to other grid systems that are typically run by quasi-federal agencies like the TVA. I find it hard to believe. I think ASIC commodification helps, and I've been saying this for years. I think states are going to lead the way. And I've always thought Wyoming is going to be one of those states. And again, that's why I think this executive order, while it is scary and the language is scary, it is logical. It's like you have a majority owned business, a business that's majority owned by foreign nationals a mile away from a nuclear ballistics military base that didn't go through the proper processes to be vetted to ensure they're not doing anything nefarious. And as an American, it's like, yeah, it actually makes sense. Like, I'm happy that the government, one of the few times I'm happy that the government was like, hey, we can't have you near this. You didn't go through the processes. It makes sense that they would do that. But if they were to go and try to confiscate a mining operation that was not near a military base within Wyoming, I find it hard to believe that they'd be able to do that successfully.
It's a rabbit hole. I think we can not go down your own show for that, but too much more. Let me just read this. I come back to it often. This was from November 7th of 08. Satoshi was responding to someone I can't remember, but remember he released it on November 1st. White paper was dated October 31st, 2008. Someone says, you will not find a solution to political problems in cryptography. He responds, you probably remember this quote, right? Yes, but we can win a major battle in the arms race and gain a new territory of freedom for several years. Governments are good at cutting off the heads of a centrally controlled network like Napster, but pure P2P networks like Nutella and Tor seem to be holding their own. And I think prescient words, like there still is a world for politics, for free speech, for private property, but they're also coming for those things, and it's hard. And I think actually nukes, I don't want to go too much more into that, but nukes are a whole other thing that provides a boatload of problems for a lot of classical liberal thinking. We talked about this on the last show. Yeah. Like, if you're going to succeed, what is your nuclear policy? Did you figure it out yet? Think about that for the next quarter. If Texas secedes, what's your nuclear policy? How many nukes you're going to keep? Who are you going to bring on board? You're going to keep Wyoming? Are they going to come into your union? But those are important questions. And if the Orwellian draconian capital, like the Hunger Games of the Capitol, if it really does become cartoonish and crazy, first of all, I generally think that's not going to happen because Americans have a pretty good track record of, maybe not nipping it in the bud, but generally fighting mega tyranny. And I'm sure there are, secessionists from the South that would disagree with me or something. But generally, Americans have proven to be, as Reagan said, the last place on earth for freedom. But this is where I'm worried. Back to the top of the show, I'm worried about that in Eastern Europe. I don't have time this show to talk about all that stuff that we usually do about Ukraine, but we have tyrannical people over here that have no interest in private property. They have no interest in free speech. In Russia, Pussy Riot showed us in 2014, that you couldn't even talk about the Orthodox Church because that came weaponized in Russia. And from when Putin was back in power in 2012, even though he really never left power, but 2012, 2013, they installed these laws where you couldn't protest with more than two people. If there was more than two people, it was an illegal protest in Russia, already back in 2013, 2014. So this is continuing. You see what's happening in Georgia right now. I don't know if you're following this, Marty, but it's wild. It's the exact same thing that's happening with Ukraine. Is the Georgian people want more freedom. There's hundreds of thousands of people coming to protest every night. It's been weeks now. And they want to do this Russian style. It's called the Foreign Agents Law, basically. And Putin did the same thing in 2012, where basically he's so paranoid and he's so afraid of any liberal opposition, which, by the way, like hit Navalny team, which he killed, in his gulag, indirectly killed. I know I'm being hyperbolic there, but they have literally put the screws down of any possible opposition in Russia. And the bill, because there's a lot of corrupt people in Georgia as well that are connected to the old, literally old people, old oligarchs, old people that had Russian money, oil money. They're following this path, which Ukraine rejected in 2014. It was one of the many things that Ukraine wanted more. The youth in Ukraine wanted to go more towards Europe and the European Union. So the old guard literally had to leave. Yanukovych, the president at the time, had to flee. He's in Russia now, in a multi-million-dollar penthouse in Russia. But in Georgia, very small country, less than 5 million, I think, 3.5 million maybe only. They are trying to introduce this same type of a law, which is it's called the Russian law, the Foreign Agents Bill, and the young Georgians are going out to protest it. But it's extremely dangerous. I mean, they might have their own Maidan style revolution where they have, literally going up against a government that's not listening to them. But so it gets even more dangerous. I mean, it's getting more dangerous by the day because, like I said at the top of the show, we don't have people like Gorbachev that want perestroika and glasnost and openness and more integration with the West. We have people just through their own paranoid, hard-nosed will are going to try to just put the hammer down like they've been doing in Russia since 2014, 2012, actually, for sure. And now in Georgia. So it's very disconcerting for us in Eastern Europe on the eastern flank. And it could go either way in Georgia right now. Georgia could have the total hammer down. Georgia has the Russian army in occupied parts of their territory right now, which has been in since 2008. Russia's busy with their genocide war in Ukraine, but the Russians could come and try to just lock that country down. I mean, it's a very small country, but the young people are different there. They're, it's a Christian country. It's a little bit different than, Azerbaijan or Uzbekistan, Turkmenistan. It's a Christian country that wants relations with the West, and Georgia and Ukraine have always been very sympathetic to Europe, and Russia's trying to keep them into the fold. So,
Yeah.
I didn't even want to talk about any of it. We should skip it because it's gonna lead to more annoying thoughts. But
They're not annoying. I had no idea this was going on in Georgia. Shows.
Yeah, check it out. Check it out on Twitter. You're going to see massive protests, young people speaking out. It got violent in Ukraine in 2014. But all right, last thing I'll say. Just remember, when you talk about helping people, I'm not talking about, and this does go back to nukes at the end of the day. So I don't know how if we want to fight tyrannical. I interviewed Peter Todd a couple weeks ago. We talked about this. Like, if you want to talk about private property, freedom of speech, the right to assemble and have your voice heard, which Russians have none. They have absolutely none. They haven't had it since 2012. If there is a government that is invading you or occupying you and you want to try to avoid that, it's hard in the nuclear age to do that without maybe perhaps someone else helping you that looks something like a government. But even in the case of America, and there's a lot of ideological classical liberals watching and listening, and I was even more so when I was younger. But there's nothing more American, I've said it many times, there's nothing more American than getting help for your Revolutionary War from the French.
It's true.
It is just a myth if you think that your ancestors, if you're a true American, were literally maybe just some Brits, maybe there's a Dutch or a Belgian sprinkled here or there, and they just rose up and overthrew the tyranny of Great Britain. They had help from, go back to that national debt chart that we had, they had help from the Dutch, help from the Spanish, and help from the French. But in Yorktown, the last battle, there was more artillery, more ships, more sailors, more French fighters, more French deaths than Americans. Cornwallis didn't even want to surrender to Washington. He wanted to surrender to the French commander. I can't remember his name. Rochambeau, maybe?
I think Rochambeau.
Yeah. All all right. The reason I say that tangent is it is totally natural for freedom-loving countries to ask for help. So just think twice when you just see all the crazy, polarized things on Twitter about Ukraine. It's happening now in Georgia, and there are young people that really, really, really want the way of life that we have, the freedom, the peace, property, rule of law, and the right to assemble. Russians have never had it. They're terribly happy to be under the thumb of an oppressed dictator. So, yeah, interest rates are going up. It's harder. It's a lot harder right now than it was in 1989. And yeah, I'm going to be, in case anyone doesn't want to hear this part of the podcast, they just like the Bitcoin charts. Probably every quarter, I'm going to be speaking about this, Marty, because it's not getting any better.
No.
Over here.
And I'm not going to pretend to have any answers.
Yeah. Look, I got to go, man. Getting late here. I'll leave you with one more. If you want to show a chart here, Logan. And Logan, if you can, oh no, never mind. It's fine. It shows up fine. Remember this one?
Yes.
This remember chart. Outside money. Bitcoin is still very small here. In 2022, the trailing 12-month value transferred, right? It's like bank reserves, the Federal Reserve, was 16 trillion. The Federal Reserve, how much did they do? A quadrillion, 1,000 trillion. They do a quadrillion dollars of transactions a year. This is trailing 12 months, long term, very slow growth here. So it's nothing crazy. To see some jaggedness here in 2014, 2008, but they do a quadrillion dollars of transfers a year. Bitcoin has maxed at about 18. That's unadjusted. I figured before I was showing adjusted, which is only like 5. You take out, you actually take out the block reward. You take out change, but you take out the block reward even. You take out minor intercompany minor things. It's just sort of like adjusted pure transactions between different parties. But it's still, now that the block reward's going lower as well, let's just go ahead and put the actual dollar value of everything. And the adjusted number here, where what the Fed is larger than, we had a record, I guess, of being Bitcoin was only 200 times smaller. But if you look at the unadjusted, which is what I'm showing now, it's even better. Bitcoin's only 60 times smaller than the Fed. But this actually shows you the velocity. It shows you the room to grow here. Even though the value of Bitcoin is only $1 trillion, the value of the Federal Reserve monetary base is $5.5 trillion, something like that. The velocity is just massive. All right, these reserves are just flying through again and again and again. But Bitcoin can do the same. So this is another chart to pay attention to. And now that we're moving into another bull, you can see this line going down again. So who knows when this will catch it? But again, this is even the more bullish chart. If you look at TPS, transactions per second, as we remember, this is with batching. Bitcoin is actually doing more transactions per second than FedWire. All right,
it's really
this is this is TTM. So trailing 12 months, Bitcoin can do 380 million transactions. This is number now, not value, but number. FedWire does 195 million. And if you look at TPS, Bitcoin with batching can get all the way up to 12. If you look at it without batching, it's a little bit below FedWire, but it's catching almost 6 transactions per second. But bullish as well, I think, because Bitcoin just needs to keep working as it's working. People can get on layer 2 with, green light, Fedi, whatever it might be, wallet of Satoshi in certain countries. You can use plenty of layer 2 technologies still, but on the layer 1, Bitcoin can actually do more than FedWire is doing. And the only thing that it would change Bitcoin would need to change this chart is just the price needs to go up.
It happened during the show. We're approaching 65,000.
There we go. FedWire is very slow with their statistical releases, so this is still only as of Q1 March. But let's see what happens in Q2, right?
Yeah. we will see what happens in Q2 because we'll be back at some point in July or August to talk about this. Probably August or September, actually, if we're being honest with ourselves.
Yeah, need a full month for the central banks to publish. It takes me time to compile, but yeah, August, sometime in August. So,
Yeah,
my friend,
you,
yeah,
I was going to
I
say you
wish you could
briefly
summer.
mentioned it. You briefly mentioned it, but the whole thing in Japan, maybe there'll be some
Mm.
interesting talk about there next time. I won't make you don't have to comment on it at all, but I hope you enjoy your summer as well.
U.S. U.S. bailing out the Japanese, very exciting.
Yeah, it's happening. It's happening.
It's happening. Outside money, exogenous to the system. That's what Bitcoin is. Let's think as well about the old mining centralization. It was always a boogeyman 10 years ago. Maybe it still is boogeyman.
It should always be a boogeyman. You should be always thinking adversarially. Um, yeah, and then all right, one last point. Like on all that, like I think the solution, like Matt Crowell came on here, was like, we need to change the proof of work algorithm. We need to fire the
Mm.
miners. Um, I think it's a capital problem on pool centralization. Then here in America too, like I think many people are trying to find technical solutions to all the attacks that we've had, which I think is good. We should be trying to listen to Satoshi's words, like get everything to a point where it becomes almost impossible to attack. But I am becoming more and more convinced that I think a lot of the solutions to a lot of the problems that we're talking about need social solutions. Like we need to end the Bank
Yeah.
Secrecy Act. We need to really rein in the government. And it sounds, it's like, yeah, it's easy to say that, hard to do. Agree. But I think we really need to begin waging narrative campaigns to highlight these problems and like wake the American people up. Going back to that chart from San Francisco, it's not capitalism, it's central
Hmm.
planners. Really get that meme into people's heads, which I think because of inflation is people are much more receptive to these messages as they're seeing the effects of the central planning in their everyday lives. And I think more and more people are beginning to connect the expansion of the monetary base in 2020 with the prices that they're paying now. So just leaning into that and letting people know that the government isn't their friend. Um,
And to end
so,
it, on a high note, I mean, most of your viewers and listeners should know if I've said it enough by now. I know that we rail on the U.S. government a lot, but I still, like you mentioned earlier, the states' rights structure that the United States has is strong. I think we saw it in COVID. You certainly saw it compared to Europe. And, you know, watch this space where I am. I'm more concerned literally physically for my health, my family's well-being, because we're much closer to the genocidal maniacs than you guys are. That's one thing for you guys to feel better about. But secondly, you have structures where even if the federal government really goes haywire, states can step in and take the lead. And the local municipality, as they should, steps in and takes the lead. I mean, most people don't think about some crazy nonsense bills that they're passing every day in Washington or, K Street lobbyists. They just think about what they're doing in an anarchic way every day. And that's great. We have some tyrannical states really on our border that we're worried about here. So that's something to stay tuned on. But again, just to tie up what I was saying earlier about the French helping the U.S., if it might be a bit of a myth to think that you know America did it all itself or never had any help with people that wanted freedom. It really was a genuine revolution that the Ukrainians had against a Russia that literally has had no democracy in 1,000 years. And the Ukrainians literally had that revolution in 2014. Georgia, if you follow what's happening to the protests, follow what the young people are saying. They don't want to go back to the Soviet Union. They don't want to go back to anything like this. And we're next on the list, by the way. The Baltics are the next one. So you guys are a good example of decentralized freedom. Don't be too cynical or skeptical when people say they might need help. I'm not even talking about arms and soldiers and all that stuff. I'm just talking about literally help that you can give through donations or whatever to people over here that are fighting on the front lines. But yeah, this is not going away, man. This is not going away. And
No, we're in the
if
fourth
Ukraine
turning.
does,
It's going to
yeah, if
accelerate.
Ukraine, we got rates are increasing. If Ukraine does have to sue for peace and actually lose some of its territory, that is a major win for a tyrannical Russia that is literally a kleptocracy of a mafia state. You can't assemble in Russia. You're going to be thrown in jail, beaten. Belarus has already fallen as well. We saw that in 2020. Belarus tried to do in 2020 what Ukraine did in 2014. Ukraine is still fighting a war for that. Belarus is fully under a 30-year dictator. Russians are under a 24-year dictator. It's tough. It's very tough. Energy comes into it, all the rest. I said I was going to end on a positive note. Positive note is you guys do have, I mean, I say you guys, I'm an American as well.
You're American.
We have a very good structure in the United States. So fight for that. And there are like Satoshi says, you can win major battles here with cryptography and technology, but also some of this stuff, especially what we've seen, the chilling effect over the last couple of weeks. Like you might have to assemble. You might have to do some things politically to try to get what you want. So I would encourage that. And I have a lot of good feelings about what Americans can do. They always make the right decision, as Churchill said, even if a little bit late.
I do as well. We'll talk about it next episode because I got.
Yeah, these topics are not going away.
No.
Every quarter, nothing's changing magically.
No, in my
I'll continue in a nice way.
My position on this has been consistent throughout the last couple of years. Is like we need to get our house in order here, and that's when I think we'll be able to help the most. Is like when we actually like are leading by example. Like that's like things are devolving here rather quickly as well. And that's like, I think Russia recognized that and picked an opportune time to do all this shit. And that's like the discombobulating thing.
They saw us fuck up Afghanistan. They saw us quagmire still from Iraq, and they're pushing. I mean, they made the same mistakes. Yeah. We could talk about this forever, man. I mean, they made the same mistakes in the 80s. They're a much more brutal regime. People should understand that. I mean, the bombing that they did in Afghanistan in the 80s, the bombing that they did in Syria in the mid 2010s. They're a brutal regime. They have no democracy. You cannot assemble in Russia. You cannot assemble. Please remember that. If you go to the streets, you'll be thrown in the gulag. So when you talk about, getting your house in order, you can do it. You can do it in America. And so I think you should do it and be a leading example for everybody else.
Yeah.
And Europe needs to do it too, by the way. Don't make it, I don't want this to seem that I'm asking Americans. Like Europe, first and foremost, needs to do it.
Europe's completely fucked.
It's a whole other topic.
These people have no economy, no will, no heart.
Some do.
So,
primarily Eastern
the
Europeans
Baltics.
and Northern Europeans.
Yeah. The Baltics.
You've been there.
Yeah.
We work hard. We work for low salaries and way different than...
should be clear, Western Europe is completely fucked.
Fourth turn.
All right. We'll be back in a few months.
This went off the rails, right? Thanks, buddy. We'll see.
Peace and love, friends.